Hi there, welcome to this special edition of Earnings Express with me, Stacy Pereira. Well, today we're here to be discussing those Q1 numbers by India's largest car manufacturer, Maruti Suzuki. Those numbers were declared yesterday and they were pretty much, you could say, in line with estimates, but also missing out on that margin number. But today we also have a whole host of July auto sales data that has come trickling in, and we will be digging deeper to see what really these high frequency indicators are telling us. But first, let me just break down those numbers by Maruti for you for what they've put out for their first quarter. Now, we could say it's a mixed bag because the profits as well as revenues, both of them beating estimates. However, the margins falling short of what was expected. The EBITDA margin has expanded by 200 basis points, coming in at 9.2%. Although we would say this is below the consensus estimate because that was what we were expecting was much more than this 9.2 number. Now, if you look at the bottom line, though, that one has definitely added some bit of cheer, surging to twofold on a year-on-year basis, coming in at 2,485 crore rupees, whereas revenue from operation, that one has risen about 22%, coming in at 32,324 crore rupees. So that was pretty much a snapshot of what we got from Maruti. The stock really not taking it well, we could say, rather the street not giving it a thumbs up so much so for that margin number perhaps. But if you have to look at the overall picture from what we're seeing from various auto companies that have come out with their numbers, whether it is a passenger vehicle ones, there we are seeing quite a bit of growth, we could say. Even the July auto sales data pretty much telling us that passenger vehicles are seeing some robust demand as well as supply. But if you look at two-wheelers, that is still in the slow lane, one would say, that one not picking up. But when you look at the commercial vehicle side again, those are really, pushing up the numbers for these automakers. Let's discuss all of these on what factors are really, being the speed bumps for these auto companies. And joining me to do that now is Mr. Arun Agarwal, the Vice President and Fundamental Researcher at Kotak Securities. Thank you so much for giving us your time and speaking with us here live at Moneycontrol. Let's just get your first assessment of Maruti's numbers, because those are the ones that are just fresh out of their 2-year jump in the profits, a number that the street should have been excited about, but has not really taken that too well, we would say. But on a whole, what would you really assess Maruti's numbers as?
See, overall, Maruti's numbers, as you pointed out in the initial statement as well, looks to be a mixed bag. So in terms of revenues, if you look at the revenue growth was quite strong at 22%. But then again, within that revenue growth, if we just try and break it out, the volume growth was, around 6.4% on year-on-year basis, and a major contribution came in from higher realizations. When we go down to the EBITDA margin side, the EBITDA margin came at around 9.2%. Now, this was below our expectation. Now, there were certain one-offs specifically in the employee side, and the sales promotion expenses were also on the higher side. But if you were to adjust this, one of the margins could have been better and more closer towards 10% mark. Net profit, yes, we saw substantial growth last year, but just to highlight, last year was a weak quarter. So on that low base, the growth looks pretty higher. But anyways, the net profit looks higher even than our estimates. It's come higher than our estimates. That was also supported partly by higher other income during the quarter. So overall, a mixed bag where the margins on a reported basis were below our estimate, but net profit came in ahead of our estimate.
Right. So margins not really making that 10% mark that was expected, and which is why we are seeing the stock also take some bit of a beating, we could say. But if you look at it, on a broader perspective, if you look back at Tata Motors last week, they also posted a good stellar set of numbers, we would say. Passenger sales are on track for them. EV sales also really taking it higher. SUVs doing it for Tata Motors as well. So all in all, if you look at the passenger vehicle as a whole, we're looking at a robust growth, one would say. So if you have to compare these companies and how they've delivered, on what grounds is one supposed to be doing that?
See, passenger vehicle industry last year had a very, very strong growth. And however, this year we think the growth will see a bit of moderation for the passenger vehicle industry. It would be more, in a single digit, mid-single digit kind of, volume growth for the industry. That what we are looking at. And from Maruti's perspective, if we were to look at, the company, we believe, has actually done recent launches. So they have grabbed some market share in the SUV segment. The overall SUV segment for the industry is doing well, and we believe that would be the main growth driver for the industry going into FY24 as well. However, there has been softness or subdued demand in the hatchback segment. Now, here Maruti has got a pretty high market share, so that would sort of offset the market share gains that they would have in the SUV segment. So overall, we believe there could be relatively very marginal, market share gains from Maruti from here on, based on the current product lineup that they have in the market.
Right. Let's also put the focus on two-wheelers, because those are not seeing, that growth that we're expecting. Even though we're talking about some bit of rural recovery happening, it's not really translating in two-wheeler sales, one would say. But then that picture also doesn't paint the full picture, we could say, because tractors and CV sales have been quite robust. So what is really that speed bump there, or that roadblock for two-wheelers?
See, if we, just try, if we go a little back, when the most of the auto companies made their high volumes a few years back, we have seen most of the other segments, excluding the two-wheeler, like the commercial vehicle or, even the passenger vehicle, either coming close to or, breaching those high in terms of volumes or tonnage for commercial vehicle segment. But the two-wheeler segment is still pretty far from the high volumes that they had made, prior to COVID. One of the reasons that what we have seen in the two-wheeler is this steep increase in the cost of ownership of the vehicle. Even in the case of, when we are discussing passenger vehicle segment, we talked about the hatchback segment, there the demand is soft. So similarly, even in the two-wheeler segment, if you look at the entry-level segment, there's still some, softness or slackness in demand at this point in time. Uh, that's on the domestic part. If you look on the export side, exports overall has been weak for the past few months. A lot of developing economies, including some of the markets in Africa, are facing currency challenges, and these developments there has been putting pressure on exports from
That's in
India.
fact, I was going to ask you about exports, because at least this initial data that has come out for the month of July in the auto sales, we are seeing that a common factor among all of these companies. Bajaj Auto has just come out with its numbers, about 18% down its exports. A big chunk of it actually coming from Bajaj Auto from there. Even Eicher Motors, for that matter, has that presence in other countries. So what is really ticking this number lower for the export factor, and then how will this really come, the realization then translate?
So see, exports, it's not something, specific to July where we are seeing a decline. We have seen decline even over the past few months now. Even during Q1, we saw a significant decline in exports from India. Now, as I talked about, devaluation of currency in some of these destination export markets would have been one of the reasons. These, availability of foreign exchange, as we believe, one of the key reasons where, why in some of the African countries, why the exports have been under pressure. Then there could be some country specific issues as well apart from that.
Right. Let me go back to Maruti's numbers now. Besides the numbers, the company has also come out to say that they are closing, or rather scrapping, that contract with Suzuki for that Gujarat plant. How much of that is going to have an impact really on production going ahead? Also, what does this give them? They are going to buy a 100% stake from Suzuki now going ahead, though they've not given a timeline as to when that will translate into. But how much is that going to really dent their numbers in terms of the earnings also, and have an impact on production?
See, it's very difficult to comment on the exact impact at this point in time, because if you look at, they have, in terms of, they have not given the modalities of the deal in terms of consideration amount, or if you look at the mode of acquisition as well, which they said they'll be deciding in the coming quarters in their board meet. However, what they have said is this transaction is expected to complete by end of FY24. So we'll have to wait and watch in terms of what really could be the impact, looking at what the consideration amount would be and what would be the mode of acquisition. Apart from that, I think what the management have said is that they are looking to reduce the complexities through this buyout of this 100% in SMG. Reduce the complexities in terms of managing their multiple powertrain under various management team, and they have been talking about a smooth transition, as far when we talk about the production plan changes, I think that they're talking about smooth production. So we're not overtly worried in terms of a production plan, but we'll have to wait and get some more details on that.
Right. Let's also look at the Nifty auto, the auto index as a whole. Is this now a good time? If you look at the charts well on a year-to-date basis, about 25% is where the Nifty auto index is really comfortably propped up at. So, should one be looking at the index and also particular stocks? What would you suggest at this point, especially post the earnings?
See, overall in the auto space, we are cautious at this point in time. We believe in terms of volume growth, we are expecting moderation in volumes to happen in FY24. So FY23, as we talked about, segments have seen a sharp growth, but we think that most of the segments will see a single digit sort of volume growth, maybe low double digit or a single digit sort of volume growth going into FY24. So overall, at this point in time, uh, we like Mahindra and Mahindra in the auto space. For Maruti, we are currently sell.
Right. So we do have Mahindra that is yet to give out its numbers by the end of this week. 4th of August is when we are expecting M&M numbers. But if I have to ask you for your, final scorecard when it comes to what we've seen from Tata as well as Maruti and a couple of other two-wheeler makers that have put out their Q1 numbers, what is your take and what would you what would be your scorecard for them?
See, overall, if you look at because these companies operate in different segments and the demand scenario for different segments are a bit sort of different. Like for Bajaj Auto, we have pretty high exports. What they have in exports saw some challenges. But as far as if you look at the performance going ahead, or what they came out in Q1 as well, Tata Motors again we saw a good performance in JLR. Apart from that, Ashok Leyland gave good margin numbers. Maruti net profit we talked about has been higher than expectation, but yeah, margins came in below because of certain one-offs they had. So overall, we'll say it's best so far been a mixed bag for the auto sector, and we'll wait out for the other companies also to declare the numbers.
Right. So you're giving it a mixed bag so far of what we've seen, at least from these auto companies, different factors really working out for each one of them. But any last word that you would have on what we are likely to see auto companies do in the future, and why should one be looking at them specifically? If you could just give us your take of, why and what would be the headwinds or tailwinds that people need to be looking out for when it comes to auto.
In terms of autos, I think in terms of volume growth, when we look at, we will see the two-wheeler industry could do slightly better going forward over the medium term. Passenger vehicle, we talked about, the industry could see a mid-single-digit growth. CV segment also will see a single-digit growth. In terms of tailwinds that the auto sector could have at this point in time would be the raw material prices, where we have seen companies reporting or getting some benefit out of the raw material prices. So overall, in terms of volume growth, it will see moderation in terms of volume growth, but we'll see margins expanding for auto companies in FY24.
Well, before I let you go, I also need to ask you about EVs. We've kind of not spoken much about EVs and how they've really played a big role when it comes to these PV makers, at least here, and whether that is really changing the scenario. We're seeing fuel prices kind of moderate, we would say, but that was one factor where we saw a push up to EVs, be it four-wheeler as well as two-wheelers. Is that really changing? Are we seeing a faster adoption when it comes to EVs?
See, electric vehicle, when we look as a whole, not specific to one segment, but see, EV for our country, we are at a pretty nascent stage at this point in time. Yes, in two-wheelers, we might be having some, high single digit sort of moderation, penetration in the in the EV segment. But as far as the passenger vehicle segment goes, the overall EV numbers in the overall mix is very, very low at this point in time. But going ahead over the course of next 2 to 3 years, we'll have a lot of new models coming in from the OEMs on the EV side, and we'll see some greater traction going ahead. However, we don't expect anything significant to happen in terms of electric vehicle penetration in the PV segment maybe, over the next 1 year or so.
Right, and what about new launches? We've seen a whole slew of them. Pretty much one big automaker coming out with one release every month, every week. We've been seeing different. We saw Hyundai Elevate recently, even Maruti coming out with them, with their, as well as the two-wheeler space where we saw, those tie-ups that we saw between Bajaj and Triumph, as well as Harley and the others. So how is that really working out? And, are these really going to give us better products on the roads?
See, in terms of new launches, in the passenger vehicle, when we talk about, we are seeing new launches largely happening on the SUV side. That's where the major demand or traction is happening. Already over the past couple of years, we have seen multiple new launches, and the overall SUV segment, specifically in the compact side, is getting a bit crowded with so many new launches happening there. Apart from that, we have seen some new launches now on the premium side of the motorcycle, where both Bajaj and Hero with their partners have launched vehicles in the premium side. So overall, yes, we are seeing launches largely happening more on the premium side rather than the entry level. That's where the demand is picking up, and that's where the companies are, getting the products on the road.
Right. So overall, we can say whether it's two-wheelers or four-wheelers, the premium segments is where we are seeing more launches, we are seeing more demand as well, whereas entry level at this point are not so much working out, still in that slow lane, we could say. That seems like we've covered pretty much all the aspects of the auto sales as well as the earnings that we've seen so far. Pretty much all of that encompassed in this whole what we could be looking forward to when it comes to these auto numbers as well as the auto sales data that has been trickling in. I'd like to thank my guest Arun Agarwal there from Kotak Securities for giving us his perspective of how we're supposed to be looking at these automakers and their earnings, and to all our guests who have tuned in, thanks so much for watching.